Stabenow as we examine issues affecting our nation's derivative markets. And thank you for always making yourself very accessible to the committee. You certainly are no stranger to the committee, and we really appreciate that and your leadership at the helm of the CFTC. This is so important for effective oversight and transparency. The last time this committee held a general CFTC oversight hearing in February 2018, the agency was finalizing rules in response to the 2008 financial crisis. Today, the CFTC and our markets face new challenges. The pandemic tested the resiliency of our global food system. Labor shortages, transportation delays, reduced consumer demand made it difficult for American farmers and ranchers to run their businesses and plan for the future. Just as the world began to recover from COVID-related supply chain disruptions, Russia invaded Ukraine, triggering global grain and fertilizer shortages and driving up prices for food and energy. Meanwhile, we are facing the effects of the climate crisis through record-breaking storms, heat waves, and droughts, all of which are devastating for farmers and ranchers. Extreme weather events, supply chain disruptions, and rising input prices are costing farmers more money and leading to higher prices for customers. This is why our derivatives markets are so important. Agricultural producers trade futures to manage risk and provide greater certainty around how much they will earn from and pay for commodities. It is the CFTC's job to make sure these markets are working properly and are free from abuse, particularly in times of stress when our producers need them the most. Against this backdrop, the steady drumbeat of technology is changing the way financial markets operate and who uses them. It's now possible to trade from almost anywhere at any time. Future exchanges are offering more products geared toward individuals, and many people hold commodity funds in their retirement plans. Crypto assets promise everyday Americans an easy way to speculate in financial markets, but in reality, they are volatile and riddled with fraud, as we have seen. The massive customer losses caused by this misconduct highlight exactly why we need federal oversight of the crypto industry. And I remain committed to working with my colleagues to hold crypto companies to the same rules as traditional financial firms. As more retail investors trade futures and crypto assets, the CFTC must ensure its customer protections are suitable for this group of investors. Customers should have access to education and information about their investments, presented in a way that is appropriate for their level of experience. Financial markets must be fair for all participants, free of conflicts of interest that give the few an unfair advantage over the many. And while the digital transformation of our financial system brings efficiencies, it also exposes vulnerabilities. Cyber attacks are a prominent threat to our financial stability and our national security. The CFTC must be vigilant in protecting derivatives markets from cyber threats. I'd like to hear whether additional authorities or resources are needed to meet this challenge. Our nation's derivative markets are fundamentally different than they were 15 years ago in the wake of the financial crisis. Yet Congress has not reauthorized the CFTC since 2008. This is long overdue, and the Commission's resources have not kept pace with their ever-expanding responsibilities, including monitoring the $350 trillion global swaps market. We've recently heard criticism that the CFTC is too small and does not have the resources to take on additional responsibilities as commodity markets evolve. I reject this thinking. The CFTC's mission is too important. In the 15 years since the agency was last reauthorized, the CFTC has received $3.5 billion in appropriations. In that same time, the CFTC has imposed nearly $20 billion in penalties. This is a remarkable return on investment for the American people and demonstrates the agency's commitment to rigorous law enforcement. I hope we can come together to support more robust funding for the agency. The work of the CFTC is critically important to our nation's economy. I look forward to hearing today about how the agency is responding to new challenges and how Congress can assist in that effort. And with that, I will turn to my friend and ranking member, Senator Bozeman.
Well, thank you, Madam Chair, for having the hearing today. It is very important. Thank you, Chairman Benham, for being here. I was on the school board for several years, and normally there wasn't many people at the school board meetings. That was a good thing. If I drove into the parking lot and saw a bunch of cars, I thought, I hope we're honoring the band or the choir or something, or we're in trouble. So looking at the crowd, it looks like things are going very well at CFTC, which is a good thing. The CFTC is vital to our agricultural stakeholders who have used derivative markets for price discovery and risk management for over 150 years. The information from these markets underpins many of the risk management tools administered through the USDA's federal crop insurance program. Futures and options contracts have been effective because the CFTC implements comprehensive rules, diligently polices the cash and derivative commodity markets, and works to protect market participants. Through a pragmatic, principles-based approach, the CFTC has built and implemented constructive, workable regulatory frameworks for markets to function efficiently. One needs to look no further than the futures market, which has proven to be the gold standard and one of the most resilient markets in times of market stress, largely due to the CFTC's regulatory framework. We witnessed this during the pandemic, producers hedging their risk weathered market volatility and emerged relatively unscathed. The CFTC was the cop on the beat, monitoring the futures markets to ensure that even in times of unprecedented disruption, end users' positions were safe. Because of the important role derivative markets play in price discovery and liquidity for agriculture risk management, it's essential that the committee exercise its oversight authority and ensure the CFTC is continuing to implement a balanced regulatory regime and reasonable enforcement approach that protects market participants against fraud and manipulation. This legacy must continue. Regarding regulation, the CFTC must remain committed to its principles-based regulatory framework. Participants deserve clear rules and transparency in these marketplaces. The CFTC, like any regulatory agency, needs to deliver guidance in a clear and timely manner. Anything short of that creates a climate of uncertainty and additional risk for end users. That's why I'm pleased to see Chairman Benham recently committed to considering codifying certain no-action relief. I encourage the agency to do so where no-action letters have been repeatedly extended. Again, timeliness is key here. If extension of relief is needed, it should be granted sooner rather than later. When properly enacted, this framework, along with the trust between regulators and contributors to a successful regulatory atmosphere. In order to maintain that trust, any data sharing between agencies must be limited and done with proper protections in place. That is precisely why Congress explicitly granted the CFTC sole authority to publish specific and anonymized market participant data in Section 8 of the CEA. The only exceptions are for limited legal actions taken by the government. No other agency has the expertise to publish this sensitive and proprietary material in a manner that safeguards registrants' data and protect their confidentiality. If this important responsibility is not handled properly, it will cause registrants to lose trust and in turn damage a vibrant market, risk eroding liquidity and undermining price discovery. I also believe the CFTC deserves adequate funding in order to effectively regulate, and I'm committed to that goal. However, increasing funding must not come from user fees. So that's a discussion that we'll have, and again, we are totally committed, though, to the sense of seeing how we can give you the resources that you need to continue to function so effectively. User fees are passed down to agriculture end users and may cause market participants to exit markets, which reduces the liquidity necessary for farmers to hedge against pricing risk. Given the volatility of commodity markets, Congress should not impose another burden on agriculture's ability to manage risk. Finally, the CFTC has a role in regulating digital commodity markets, and recent market events reinforce the need for greater federal oversight of the industry. This committee has studied this emerging sector and the recent events which have caused consumers to question the safety of digital commodity markets. I'm confident the CFTC is suitable for an expanded role in regulating the digital commodity spot market. I'm committed to working with Chairwoman Stabenow and our colleagues to create the safeguards the market needs. I look forward to Chairman Ben's testimony about how our derivatives and commodity markets are functioning, the work the agency is undertaking, and ideas on how to improve the agency and the marketplace in these challenging times. And with that, I yield back.
Thank you very much. And just for the members' sake, we have a vote that I understand will be starting at 10:45, and so we're going to continue the hearing. When that does start, I will go vote, come right back, and then at some point Senator Bozeman will do the same. But we will juggle this morning. So let me turn to Chairman Bennerman. Welcome again.
Good morning, Chairwoman Stabenow, Ranking Member Bozeman, and members of the committee. Appreciate the opportunity to discuss the state of the CFTC with you this morning. In recognition of Women's History Month and International Women's Day, I first and foremost want to acknowledge all the women in attendance, both in person and virtually, and at the CFTC, and also to commend my colleagues, Commissioner Johnson, Goldsmith, Romero, Mersinger, and Pham, for their leadership and public service to this country. I'd also like to recognize and thank all CFTC staff for their continued dedication and commitment to the American public. During the past 3 years, CFTC rules and regulations have ensured that the derivatives markets performed well for businesses who are able to hedge price risk under extreme pressures brought on by the pandemic, geopolitical tensions, and extreme weather. I last appeared before this committee to address the clear absence of any regulatory standards for the digital asset commodity market. Today, I'd like to share some of my thoughts on how the adoption of innovation and technology is more broadly changing the nature of our markets and what statutory amendments should be considered since the CFTC's authorization lapsed in 2013. Strengthening our rule set is a major priority for 2023. Looking at over 30 matters for considerations, themes emerge: enhancing risk management and resilience, fostering sound and responsive practices regarding cybersecurity and the use of third-party service providers, strengthening customer protections, promoting efficiency and innovation, improving reporting and data policy, and addressing any duplicative regulatory requirements and amplifying international comity and domestic coordination with both federal and state regulators. Last month, the Commission issued its first public statement on the cyber-related incident at ION-cleared derivatives. Current law could not have prevented the ION incident, as the direct regulation of third-party service providers is beyond CFTC jurisdiction. Recognizing the relevant risk, I have asked our Market Participants Division, which is currently developing rule proposals to address both cybersecurity and related risk, to further identify potential weaknesses with respect to third-party service providers and vendor relationships, and identify appropriate solutions for Commission consideration. However, even if the Commission supports a rulemaking in this area, with growing cybersecurity risks permeating all elements of our financial markets, I believe this committee's reauthorization effort should consider what role and relationship the CFTC should have with third-party service providers and vendors of registered entities. Extreme weather events contributed to the confluence of factors that defined commodity volatility in 2022. The Commission, both domestically and in international work streams, is continuing to engage through the Climate Risk Unit. One such effort involves the voluntary carbon markets, which are jurisdictional to the CFTC in light of listed futures and on registered designated contract markets. These markets require a new way of thinking, present questions requiring careful examination, and benefit from the public-private partnership that is the hallmark of the CFTC. As I discussed in December, the CFTC does not have direct statutory authority to comprehensively regulate cash digital commodity markets. Its jurisdiction is limited to its fraud and manipulation enforcement authority. In the absence of direct authority and surveillance authority for digital commodities in an underlying cash market, our enforcement authority is by definition reactionary. We can only act after fraud or manipulation has occurred or been uncovered. Comprehensive regulation would enable us to establish market structures and regulatory barriers, guardrails, and guidance that would prevent fraud before it happens, and fully deploy transparency and surveillance tools to see fraud when it does occur. With the recent expansion of direct retail participation in the derivatives markets and in the underlying commodity markets, such as those for digital commodity assets, the CFTC must be able to ensure that the products offered are suitable, that the barriers to entry are meaningful, and that the disclosure information provided is material to the decision-making. The Commission will remain vigilant with respect to our registered entities and use our existing tools and authorities to the fullest extent of the law and the authority we are given to propose stronger rules, monitor and surveil the markets, and root out misconduct wherever it lurks. As chairman, in January of 2022, I appointed the CFTC's first ever Chief Diversity Officer, who oversees the agency's Office of Minority and Women Inclusion. I'm eager to see the CFTC's OMWI statutorily authorized, similar to other federal financial regulators. This would expressly authorize us to assess the diversity policies and practices of entities regulated by the agency, submit annual reports to Congress, and allocate additional resources and staff towards outreach and engagement. As this committee knows, the overwhelming success of the whistleblower program has led to the potential for disruptions in continuity of CFTC operations for the Whistleblower Office and the Office of Customer Education and Outreach. In addition to the importance of a long-term fix to avoid one-time depletions that are greater than the total balance of the whistleblower fund, I believe amendments to the statutory provisions describing the permitted uses of the Customer Protection Fund would allow the Commission to implement a host of new investor protection programs. More than 5 years ago, I testified before this committee during my nomination hearing to be a CFTC commissioner. In my opening statement, I remarked that, quote, as this committee shifts focus to the 2018 Farm Bill, I commit to working with each member of this committee to ensure the CFTC remains both a desirable and cost-effective risk management and price discovery tool for agricultural producers and the entire value chain. This commitment remains my anchor, and as this committee now considers the 2023 Farm Bill, I remain committed to this promise. Thank you, and I look forward to answering your questions.
Thank you very much. Chairman Benner, in a recent speech, you said that the volume of futures trading by retail investors is about 50% higher today than it was before the pandemic. And I'm concerned that the current regulatory framework may not be sufficient to protect these individual investors. Can you talk about how the CFTC defines a retail investor and what the Commission is doing to address their increased participation in the futures markets?
Thank you, Senator. Extremely important question, given what you said and some of the data that we've collected and analyzed over the past few years. The way we generally characterize a retail investor is by sort of the characteristics of the individual and the trades they're making. So the amount of money that they're posting for margin, what types of products they're investing in. They typically invest in micro or nano contracts, which are smaller contracts. They have short durations of trading periods as opposed to longer durations where they leave a position open. And they're typically trading for their personal account as opposed to a customer's account. And unfortunately, what we've seen in analysis is retail traders, or those at least defined by those characteristics, generally tend to lose money. So other than that, there's no prescriptive or statutory definition of a retail investor. We have some definitions around an eligible contract participant and what is not an eligible contract participant. But as you pointed out, given the growing demand, but also growing state of the retail investor, I think it would be important for the committee to consider a definition so that we could essentially create protections around that. I wouldn't want to question our segregation rules, our conflicts of interest rules, our disclosure rules, our relationship with intermediaries, which are our brokers, the futures commission merchants. These entities and our customer protection rules are very resilient and they're durable and they're very strong. But I think given the growth of retail investors, we're using every tool we have, which is mostly, as I mentioned in my opening remarks, through the Office of Customer Education and Outreach, to ensure that we're getting as much information through disclosures, through pamphlets, through in-person meetings, through various state agencies and other working groups, to make sure investors ultimately know the risks involved with leveraged derivatives markets and how they're allocating their capital.
Thank you. I encourage CFTC to continue to really look at this, to really study it, and let us know if there are issues that we need to be addressing around language accountability and so on.
Absolutely.
So, absolutely. Let me speak a minute about the risks and impacts around the climate crisis, because there's serious risks, as we know, to our financial system and our food security. No one bears the burden of increased temperatures and droughts and flooding more than our agricultural producers. And last year, the CFTC requested information from the public about actions the agency can take to address climate-related financial risks. And I wonder what you can tell us about what you learned from that public engagement process, and how will the CFTC respond?
Thank you, Senator. I'm going to start quickly, and I mentioned this in my statement as well, on the voluntary carbon markets. I would say there was fairly unanimous consensus that the CFTC should use its enforcement authority around cash voluntary carbon markets. And as you know, we have a jurisdictional interest in carbon markets, voluntary carbon markets, because we do have listed carbon offset contracts on registered CFTC exchanges. So not unlike crypto, this creates a jurisdictional connection between us and the cash voluntary carbon market. So we will use every tool we have within the enforcement division to ensure that we're policing those markets so that they have integrity, and that the futures markets are both resilient but reflective of price discovery and risk management. Moving away from voluntary carbon markets, I would point to some areas that had maybe a bigger divide between supporters and opponents, with typical things around the climate space: disclosures, data management, scenario analysis or stress testing under different climate scenarios. So we are collating essentially those comments, trying to put them together, and then drawing out a path for 2023 of what policies we can push out that would be reasonable, sensible, and have a large coalition behind them. Certainly want to build as much of a coalition around policies, but also understand, as you point out, there are certain climate risks that we're going to have to address, and if policy is able to do that, we'll certainly move forward in a pretty swift manner.
Thank you very much. And then finally, cybersecurity, you mentioned, and companies registered with the CFTC are required to comply with the agency's cybersecurity rules, but what about third-party service providers like ION, and what can you do to strengthen the financial markets' defenses against these increasingly sophisticated cyber attacks?
Thank you, Senator. Extremely important question, and as I pointed out, we do not have jurisdiction over third-party service providers. We are in the process of updating our cyber rules, and we will accompany that cyber rule with a guidance document on third-party service providers. But from the vantage point of a third-party service provider, which are very heavily used by industry because of technology needs and expertise, the vendor itself has to comply with the requirements of the registrant, which we set principles and standards for. But ultimately, I think it is going to be incumbent on the Commission to think about expanded authority for the agency, for the committee to consider expanded authority for the CFTC. And I would use as an example the banking supervision and the banking regulators' authority over third-party service providers. They essentially have supervisory or examination authority over vendors that are providing a service to a regulated entity. So you can imagine a CFTC-regulated entity outsources a service to a vendor. In a situation or a scenario, could we potentially have supervisory or examination authority over that vendor because the vendor is providing a regulated service to the regulated entity? And I think that would be a step forward, provide a little bit more assurance, but as you point out, cyber risk is hugely important. And we're doing everything we can to send signals to the market that this has to be a top priority for every entity that's registered with us.
Incredibly important. Thank you very much. I'll now turn to Senator Boozman.
Thank you, Madam Chair. What I'd like to do is go ahead and defer to Senator Marshall. No, No, no. What I'd like to do is
Yes.
defer to Senator Marshall and then get back in the order.
All right, Senator Marshall.
Oh, okay, thank you, Madam Chair, and welcome again back to the Ag Committee, Chairman Benham. First advice I got from Senator Roberts when I was helping write the Farm Bill 5 years ago was to go sit on the tongue of the wagon and listen to the farmers. I've found a couple places more comfortable than the tongue of the wagon, but we've been talking to farmers. And one of their top concerns is what's going on at the CFTC, and maybe they're just looking for some certainty and some clarity. My farmers and ranchers have noticed that the CFTC has been focusing more and more on the administration's climate agenda. In June of last year, you had a voluntary carbon convening to discuss the carbon offsets market. Your role is largely in the derivatives market, which my farmers and ranchers use as a risk management tool. Is it prudent for you to be pushing a carbon market agenda rather than be focusing on your traditional responsibilities?
Thanks, Senator. I would say first and foremost, we are absolutely focused, as I said in my statement, on our traditional markets. This is #1 priority. I'm the sponsor of the Ag Advisory Committee. We've convened a good group, and we're always focused on our agricultural markets above all else. Regarding the voluntary carbon markets convening, as I pointed out earlier, we have to be very cognizant of our jurisdictional markets. And what I mean by jurisdictional markets is that if we have listed futures on regulated CFTC exchanges, then the cash markets become important to us, because if there's potential for fraud or manipulation in a cash market, that fraud or manipulation can be reflected in the markets that I regulate. So as we see more commodity markets become retail-oriented and are unregulated, but are listed on derivatives platforms that are regulated by the CFTC, I think it's very incumbent that we have a look forward to what could potentially be a detriment or an issue for our markets.
Certainly $350 trillion was the number you quoted in derivatives you're overseeing, so I'm sure that does take up a lot of your time, most of your time. We've also noticed that you're looking at climate-related risk to your traditional products. The conversation around ESG requirements and financing has folks worried about access to capital unless they conform to some mandated climate policy. As you study climate-related risk, is it your intention to bar risk management at the CFTC unless a person conforms to climate policies? And I just have to add, farmers and ranchers were the original stewards of the land, and no one is working harder to practice sound environmental farming than our producers back home.
Thanks, Senator. You know, I couldn't agree with you more about that, understanding that farmers are, in fact, the most important stewards of our land. I would say that thinking about the climate issues and some of the extreme weather events we're experiencing, my focus is just to ensure that our markets and the infrastructure that our markets are built on remains resilient as we continue to face dramatic extreme weather events. And this could be from the exchanges to the clearinghouses as well. And I think, to your point, we will not create any policy that will force an action. It is just about ensuring robust, resilient markets that are thinking about future risks, and in this case, weather events that are actually putting a lot of volatility and pressure on commodity prices. And we need to do what we can at the CFTC to ensure that these markets remain strong and resilient.
Thank you. The more flexibility we can give our farmers and ranchers, the better the environment's going to do with their practices. I want to talk about crypto for a second. When it comes to crypto, I've consistently said that my biggest concern is addressing the criminal activity that crypto facilitates. It's recently come to my attention that the world's largest crypto exchange, Binance, has set up a U.S.-based entity that internal executive has said is a, quote, de facto subsidiary, end quote, as a way to shield their main platform from regulations. This is the same platform where $2.35 billion in funds that we know about were laundered through their platform. This is concerning, to say the least. Though I'm encouraged to see reports that the CFTC has multiple investigations into Binance for a number of different infractions, I would love to hear more about these efforts outside this hearing, of course, if we're able. Both before and after the collapse of FTX, there's been ongoing conversations about who should have regulatory oversight of cryptocurrencies, the SEC or the CFTC. Do you believe that the CFT has the resources and expertise necessary to bring these out-of-control crypto exchangers, the Wild West, as it's been called, who seem to think that they have the right to do whatever they want, into compliance?
Thank you, Senator. I have full confidence that we have the expertise and personnel to regulate the crypto markets. We also have a legacy understanding of market regulation, which I think can be implied in many respects in the same way over crypto markets. What we don't have is resources. So I think as this committee considers possible regulation for or statutory authority for crypto regulation, I think it would be incumbent for us to have additional resources to implement and impose that regulatory system over the crypto markets.
I'm not sure it's a fair question. On a scale of 1 to 10, how concerned are you about the crypto industry right now?
7.5.
Thank you. I yield back.
All right, thank you very much. Senator Brown.
Senator Marshall, I'm as chair of the Banking Housing Committee, I'm at 8.2. Just thought I'd throw that in. All right. Okay, well, I actually am higher than 8.2, and I know of your work on it, and I thank you for your work. Madam Chair, yes. Senator Bozeman, thank you. Madam Chair, I so appreciate, I know this is your last farm bill, I so appreciate the serious bipartisan and bicameral way you're looking at this bill. So thank you for doing that. Chair, nice to see you again. Russ, thank you for being here. And I want to sort of follow, peripherally maybe, but some of the things my colleague just said. You brought a new enforcement director at CFTC, has extensive experience as a federal prosecutor, bringing cases on cybercrime and complex fraud, all good signs. I think it's important as our markets become more complex. And as we've seen with crypto market participants, are not starting with the best compliance program. So walk through your goals for enforcement and what are the areas that give you the most concern?
Thanks, Senator. I did very intentionally bring in a former prosecutor who has experience both on the cyber side, the crypto side, but also on the commodity side. He had done a fair amount of work with the CFTC's New York office when he was working in the Southern District of New York. When I think about the landscape of our markets and the markets that have the most impact on commercial end users, on retail, on Americans, obviously commodity markets in an environment where commodity prices are extremely volatile because of geopolitical issues, still sort of residual COVID challenges, and of course because of climate issues, making sure that commodity markets are reflective of supply and demand and are free from speculative activity that is pushing prices outside of that supply-demand bandwidth is a priority. Crypto, unregulated market, you and I have discussed this. The committee obviously cares deeply about it. We brought over 70 crypto cases in the past 7 or 8 years without authority to police markets other than this very small fraud and manipulation authority. It continues to be a priority so that we can protect retail customers who are trading in these markets. And then cyber, as I mentioned, continues to be a huge risk for the agency and financial markets generally. It's a single point of risk for any one regulator and the entire financial ecosystem, so that we really all have to have hands on deck. So to the extent that we can have a strong enforcement director who's sending a clear message about stepping up the standards around cybersecurity, I think that will be very effective and impactful on our markets.
Thank you. Last year, following Russia's barbaric and illegal invasion of Ukraine, commodities markets, as you know, experienced volatility as the supply of certain agricultural commodities was jeopardized. The demand for many commodities was uncertain. Talk about some of the lessons CFTC learned from that time. And do you have any concerns about the adequacy of margin requirements or supervision of traditional commodity markets?
Thanks, Senator. We've done a fair amount of work, and I have personally myself done a fair amount of work both domestically and within international multilateral organizations. This question you ask about margin requirements in extreme volatile periods is a huge challenge because it's essentially a strain on a balance sheet of a financial company that has to come up with collateral in a short period of time. That strain ends up having potentially downward effects on other parts of the balance sheet and could affect other markets that are regulated by the SEC or prudential regulators. So we are very cognizant of it, but as we have looked at the data and the periods of volatility, what we have seen that's given me some level of comfort is that the demand for collateral is directly correlated with the volatility we saw. So as much as it is a strain on the balance sheets and puts pressure on the financial institutions to have to come up with this margin, it is in direct correlation with the volatility. So it's just an indication of how volatile commodity markets were in both 2020, but then also after, as you point, Russia invaded Ukraine. So we are constantly reviewing the system. We are making sure that the clearinghouses are being transparent, that they're sharing with the clearing members the margin methodologies is a term we use, but essentially how they calculate margin. And we'll continue to look at that to make sure that part of our regulated system, the clearinghouse, is the most important one because it is systemically important in many circumstances.
Do any of those lessons from that you just mentioned, does that translate to crypto markets in any way?
I would say that we have to be mindful of leveraged markets, right? Our markets are leveraged for a reason. It creates incentives for end users to hedge risk. But as we're seeing a growing demand for crypto derivatives, we have to be mindful of the intent, the purpose, and the utility of crypto derivatives and making sure that margin requirements in these markets are sufficient, adequate, and essentially eliminate risk to the extent it's possible.
Thank you, Madam Chair.
Thank you very much. And now Senator Boozman is passing again to Senator Tuberville. I'm not sure Senator Boozman wants to ask questions. He's enjoying listening.
Well,
all right, Senator Tuberville.
I think he's trying to learn something.
I
about
think
crypto,
so.
huh? But thank you, Senator Bowman. Thank you very much. Chairman, thanks for being here today. Thank you for what you're doing. You know, the last several months have shown that Congress has got to get its act together and regulate cryptocurrency in a way that protects consumers and encourages innovation within the United States. When you look at the three main bills, and you know which, Stabenow, Boozman, Loomis-Gillibrand, and the House Ag bill, do you have a view on which bill gives us the best clarity of regs?
Senator, they all have components of it which I think are very beneficial, and I think ultimately when I think about the intent of the bills, it's to create transparency, it's to regulate the market, it's to shed light on those markets so that we don't run into situations like we did a few months ago. I would say that specifically the Gillibrand-Lummis bill is very expansive, and I think that's in part because Senator Lummis is on the Banking Committee and she has a larger view of the crypto markets. But having worked with this committee on the DCCPA, which is Senator Stabenow and Boozman's bill, that is very narrowly tailored to the CFTC, what authority we have and what's jurisdictional to our markets, which is commodity digital tokens as well. The House bill is also very good. I think there's some challenges that I have spoken with members on the House side about making sure that we have federal oversight to create a single market system for the crypto industry.
I would just add the correct answer is the Stabenow-Boozman bill.
He's straddling the fence, Madam Chair. He's a pretty good politician. Can the CFTC currently block a Chinese company from buying a U.S. crypto exchange, or is legislation needed to prevent that type of transaction from happening?
So, Senator, assuming that other parts of the U.S. government would not get in the way or make a decision that would prevent that acquisition, the CFTC alone does not have the authority to prevent an acquisition of that type.
Okay, thank you. Do you see similarities between crypto markets and foreign currency exchange markets?
Well, I actually don't, because foreign currency exchange markets, on the derivative side are very well regulated. This, if nothing else, are lessons learned. We had this committee took up provisions around the retail Forex market about 15 years ago. And I would say a lessons learned from that exercise, because leading up to that legislation, which occurred in 2008, I believe, the retail Forex market was unregulated. There was a lot of fraud, there was a lot of manipulation, and there was a lot of taking advantage of retail investors. And I think there was a lot of concern about why do retail investors need to be trading Forex. But ultimately, as that comprehensive regulatory system was put in place, what we saw was an immediate withdrawal of the fraudsters, so to speak, and a relatively healthy market. So I think that's a lesson to what are the benefits and attributes of comprehensive regulation, and putting aside the utility and what some folks think about the usefulness of crypto or not, regulation, I think, is important for customer protections.
Is there anything we can learn from foreign exchange market regulations that you can think of?
In the crypto space, as I've had discussions with you, Senator, and other members of the committee, there are jurisdictions that are moving forward on crypto regulation. So I am personally in contact with my counterparts in Europe and Asia to see what they're doing and how they're doing it. I still am not concerned about sort of a race to regulate because of the fear of technology necessarily moving away. But that said, is we have to keep that on our mind because eventually that inflection point will occur where we do need to move forward. So I think we need to stay true to what we do in the United States and as policymakers is being deliberative, cautious, and patient. But we in fact do need to make sure that we're always moving forward.
You know, the lack of progress by the CFTC and the SEC to define which crypto tokens are commodities and which tokens are securities is an issue. It prevents more crypto futures contracts from coming to market. Are you having these conversations with the SEC, and has the SEC offered legal opinions as to what it views as a commodity and what it views as security?
Thanks, Senator. Just to answer the first part of the question, without hesitation, I myself am working closely with my counterpart and staff in my office and across the agency is consistently and constantly working with the agency, the SEC, to ensure that we're coordinating in a meaningful way. We do not have necessarily any legal guidance from the SEC, but we are thinking about how we could work together, which we've done historically in a number of other markets, to ensure consistency, clarity, and transparency for the market. But I think, as you recognize, this is a very difficult issue, and in many respects, we can lean on legacy precedent to define a digital asset, whether it's a commodity or a digital security. But in many respects, also, there are characteristics of digital assets that are very unique from traditional assets, and they do need a sort of new way of thinking. And I think it would be incumbent for both regulators and the executive branch to work with Congress to ensure that we establish a framework that we can all get behind.
Thank you for your hard work. Thank you, Madam Chair.
Thank you. Senator Klobuchar.
Well, thank you very much, Madam Chair, and thank you, Senator Boozman, for hosting this hearing and calling this hearing, and thank you, Mr. Chairman. I want to follow up with the last of the Senator Tubble's questions about the need and reinforce the need to coordinate with the SEC. In your testimony, you note the Commission has brought 70 enforcement actions involving digital assets. We thank your staff for your efforts. Could you just step back a little and describe, because of the Commission's limited authority, how you can only go after bad actors after the fact?
Thanks, Senator. Unfortunately, because we don't have comprehensive regulation and authority, which, just to use as an example, in our traditional markets, we have surveillance tools, we have registration authority, all different tools that essentially create a compliance environment that enables the CFTC to identify fraud or manipulation while it's happening or potentially before it's happening. In the crypto space, which is unregulated, we have authority to police fraud and manipulation. And that is the only authority under which we can bring an enforcement case. So we have to rely on tipsters, complaints, and individuals coming to us and saying, we've identified fraud or we've seen manipulation to come to us. So unfortunately, it's limited, but we're doing everything we can.
So that's why legislation enabling the CFTC to require more transparency and conduct more market surveillance would help you greatly to prevent deception and consumer abuse?
Tremendously, yes.
Okay. You previously testified about your concerns with leverage, interconnected markets, and contagion risks with digital assets and the exchanges they are traded in. When FTX collapsed last year, we saw the effect on the wider cryptocurrencies ecosystem with companies like BlockFi Inc., a crypto lending business that had received financing from FTX filing for bankruptcy. How does the CFTC view the state of interconnectedness in the cryptocurrency market post-FTX collapse?
Thanks, Senator. Certainly, we've seen valuations of the crypto market come down pretty significantly since the collapse of FTX. But we don't view that as a permanent change, and we're constantly thinking about the interconnections between all parts of the crypto market. So we have to anticipate a scenario where markets might increase in size and volume and then present financial stability or market resiliency risks again. So we're doing what we can with the authority we have. It's limited, as you pointed out, but we're ensuring that we're using this enforcement authority to bring bad actors to account.
Okay. During your nomination hearing, you and I spoke about the importance of including the needs of farmers, ranchers, and energy producers in the Commission's mission. You know better than anyone, farmers who rely on futures markets for hedging purposes have needs that are different from those of Wall Street traders. What are the distinct needs of farmers as end users of futures products that deserve particular attention from this committee?
So I think number one is ensuring that the products remain cost-effective and efficient and are meeting the demands of the farmer is price discovery and risk management. And we've seen a consolidation in the market, which I think is not unique to the derivative space, especially since 2008 and the Dodd-Frank Act. And I think that creates limitations for some of the smaller end users, like farmers and ranchers in Minnesota, to be able to use derivatives markets. As you know, and as you're working on, the Farm Bill will provide tools and crop insurance and commodity programs. But historically, futures markets were just another title in the Farm Bill, and we have to make sure that futures markets remain a risk management tool, a cost-effective risk management tool for the agricultural economy.
Mm-hmm. And you know as well as anyone how the supply chain disruptions created price volatility. Senator Thune and I, he was here, passed a major bill on shipping reform that I believe was helpful. But we continue to have disrupted markets for agricultural inputs and commodities. Farmers are still concerned about this in my state. Could you speak to the ways that the CFTC works with farmers and ag industries to take into account the commercial risks inherent in ag production, processing, and marketing?
Thank you, Senator. You know, personally, I'm engaged with the agricultural economy through advisory committees, ensuring that we're visiting different parts of the country and seeing what the issues they are facing, whether it's shipping, whether it's trade, any national security issues. And we're just constantly working and ensuring that our markets, as I pointed out earlier, are succeeding in achieving the price discovery and risk management function. And I think that in many respects is built around our regulatory system, but as you pointed out, our enforcement authority becomes very important. We brought a number of cases against large commodity traders for position limit violations last year, and it's actions like those that I think remove bad actors and speculative activity, which drives prices outside of that supply-demand range. So we'll continue to focus on ensuring markets are reflective of price discovery, because this affects cash prices at grain elevators across the country. They are looking to our markets to price their goods as they sell them to ship overseas or domestically, and we have to ensure those prices are fair, transparent, and reflective of supply and demand.
Thank you very much. Appreciate it.
Thank you so much. And Senator Ernst.
Thank you. I'm tagging in here at the end. I appreciate it. We've had a busy morning. Really appreciate you being here today. And just, I'll keep it very brief. I do a lot of visits across the state of Iowa and visit with farmers and stakeholders. And there's a huge interest from the public and private entities to address carbon reduction. So if you could address this, is there a role for derivative markets to facilitate carbon reduction and the risk associated for those individuals?
Thank you, Senator. It's an important question because I think as we've discussed, carbon markets have been emerging and growing over the past couple of years, both on the compliance side, which is more related to a cap and trade program, but also more importantly on the voluntary side. And I think this actually creates a huge opportunity for landowners, including farmers and ranchers in Iowa, to create a new revenue stream for themselves by sequestering carbon through a number of techniques. But ultimately, by sequestering carbon, they're going to generate an offset and they're going to sell those offsets. So I think that's where the CFTC comes into play, because essentially what you're creating is a marketplace, and we need to ensure that marketplace has integrity, has transparency, and that the price discovery function is existing in an appropriate manner. And the derivatives market plays an extremely important role on top of that cash market to enable farmers and ranchers and other producers to hedge risk associated with the volatility in those prices. So we're working with the authority we have, which is limited, but we're working with that authority to ensure those components are enshrined.
Well, I really appreciate it. We just did a roundtable on Title II conservation for the Farm Bill. I did that in Iowa this last weekend, and people are really, really excited about this opportunity. So I appreciate your attention to it, and we look forward to working on that in the upcoming Farm Bill. Thank you. Thank you, Madam Chair.
Thank you, absolutely. So let me turn to Senator Durbin.
Thank you, Senator Stabenow, and Mr. Bainham, thank you for returning to the committee. The CFTC responsibility over the futures industry of Chicago is a very important consideration, and I commend you for the work that you've done and believe that you've helped to establish the integrity of their operation, which is respected on a global basis. Let me say that I don't believe that we have shown an adequate concern for the same issue. Since 2006, CFTC has only been funded at its requested level twice. $304 million in fiscal year 21, $365 million in fiscal year 23. Last year, the CFTC estimated it needed approximately $127 million in additional funding to effectively oversee the digital asset market. That's 33% of your annual budget. And for the record, in fiscal year 22, the CFTC imposed more than $2.5 billion in restitution, disgorgement, and penalties. So it isn't as if you're not doing your job and the Treasury is better for it. I think that is a reality. But the issue that I want to speak to is one that we've discussed before. When you were last before the committee in December, the crypto industry was cascading in the dirt. We had just witnessed a stunning collapse of FTX, a company that was less than 3 years from its founding, supposedly worth $32 billion, 1 million users, and it collapsed overnight. Since then, CFTC, SEC, and DOJ have announced charges related to the collapse. I commend them. But the cat's out of the bag that I've been skeptical of this crypto mania from the start. At one of the committees last year, I warned about the contagion and risk if crypto was more fully integrated into the broader financial market. I asked you in December how long it was going to take to unpack the FTX mess, to be able to understand exactly what happened. The sooner we shine a spotlight on what happened to FTX, the full extent of the scope of the failure, the better. How much closer, Mr. Chairman, are we to getting to the bottom of what happened with FTX?
Thank you, Senator. I would unfortunately have to say that, as you pointed out, there is open litigation at both the civil and criminal level by the SEC, CFTC, and the Justice Department. So we are working diligently. We are working as quickly as possible and trying to unpack all the facts that are coming to us. So more to come, but we're going to do it cautiously and slowly so that we can get it right, and all charges are going to be addressed appropriately.
Well, I understand that, but despite the indictments and the legal charges that have been filed by these different federal agencies, the crypto industry is on full steam ahead. Hardworking Americans are taking financial advice from investment advisors like Matt Damon, Larry David, and Tom Brady. Crypto firms are applying for accounts at the Federal Reserve. Trusted names in the retirement industry are offering exposure to Bitcoin and 401k plans. The industry argues that the FTX collapse was an anomaly. I don't believe it. What do you think?
Senator, I think it supports my argument and many of the arguments that have been made by this committee and members of this committee that we need comprehensive regulation. I don't believe that the technology is going to go away. I don't believe that the trading markets, and that is the component that's most important to me as a market regulator, are going to go away. And I think we have to think very carefully but aggressively about comprehensive regulation so that we can do the best we can to avoid another collapse.
This horse is out of the barn.
Correct.
The crypto industry, financial regulators have highlighted a laundry list of risk associated with them. Fraud, commingling of funds, lack of disclosure, high volatility, interconnectedness of the industry, conflicts of interest, lack of basic governance practices, and risk control. It's abundantly clear when it comes to crypto, we need real cops on the beat, and we need them now. There is a plea that's been made by the SEC for some authority and jurisdiction in this area, and I'm listening to their request. I don't know that we can respond quickly enough to avert any further disasters in this industry. But I tell you, at this point, those of us who were skeptical are becoming convinced crypto is a dangerous investment, dangerous for everyone, and the American government at this point is not doing its job in regulation. Thank you, Mr. Chairman.
Thank you, Senator.
Thank you, Senator Durbin. I think it's, why don't we go to Senator Gillibrand?
Thank you, Chairman Benham. I really appreciate your statement that you believe it's time for comprehensive regulation. And as you know, I've taken the time to write a bill with Senator Lummis to provide that comprehensive framework. I'd like your assessment of that draft. We're doing a new draft that'll be released mid-April, but our ambition is to make sure there is a place to start a national conversation about a holistic approach to digital assets, to make sure that digital assets that have the character of securities are regulated by the SEC, to have the assets that have the indicia of commodities are regulated by the CFTC, to make sure stablecoins can be overseen by the OCC, to make sure that there are tax provisions for the entire industry, to make sure there are cybersecurity requirements for every part of the industry. So I'd like your assessment of the direction of that bill and ways that we can continue to improve upon it. You and I have met about this, but I'd like your insights for the record, because before we introduce the new version of this bill, I'd like your thoughts. Thank you.
Thanks, Senator. You know, as you point out, and I said this, I remember months ago at an event, what was most important to me in terms of the success of your bill with Senator Lummis and getting it out there is really pushing the conversation, right? Because naturally the bill will get amended and get pushed in different directions, but I thought you very carefully and thoughtfully considered all components of the market, not just something that obviously is resonates with me as a market regulator on the market side, but thinking about the stablecoin issues, thinking about settlement, thinking about custody, thinking about cybersecurity risks. So comprehensive in that nature. I think given what we experienced and what we saw with FTX, a premium on obviously segregation of assets, on customer conflicts of interest and ensuring that those conflicts are walled off very carefully. I think there are different questions that we probably have to ask in many respects with respect to digital assets in light of cybersecurity, vendor risk, third-party service providers. So I would just emphasize those are some components that might be worth looking at or taking a second look to ensure that we don't run into another situation like we did a few months ago.
Thank you. In light of Chairman Gensler's recent suggestion that all digital assets except for Bitcoin are securities, what does that mean for a number of designated contract markets currently offering futures or swaps on Ether?
Well, it would obviously raise questions about the legality of those DCMs, designated contract markets, listing these digital assets that are purported to be securities. I've made the argument that Ether is a commodity. It's been listed on CFTC exchanges for quite some time. And for that reason, it creates a very direct jurisdictional hook for us to police, obviously, the derivatives market, but also the underlying market as well.
And as a regulator, how do you respond to such a position, given that the SEC interprets the federal securities law? If there is this competition for oversight, what tools do you have to respond to that, given that you have been having oversight over Ether under the securities market?
So, Senator,
under the commodities market.
Yeah, Senator, it's an important question because the process for which an exchange or DCM, as you pointed out, will list a contract is very clear under our law. They could seek approval by the commission or they could self-certify a product. That self-certification process is one that shifts the responsibility to both the CFTC and the market participant. And I would say serious and deep legal analysis goes into the thought process before a product is self-certified. So there's no doubt in my mind, and having known this and been at the commission when Ether futures were listed, that both the exchange and the commission thought very deeply and thoughtfully about what is the product and does it fall within the regime, the commodity regime or the security regime. We would not have allowed the product, in this case the Ether futures product, to be listed on a CFTC exchange if we did not feel strongly that it was a commodity asset, because we have litigation risk, we have agency credibility risk if we do something like that without serious legal defense or defenses to sort of support our argument that that asset is a commodity.
Thank you. And with regard to Chairman Gensler's position for CFTC's 2021 settlement with Tether, the undertakings of which I presume you're still monitoring. So how do you address those kinds of issues?
Again, Senator, it's, in speaking about stable coins themselves, because there's a larger question about what direction stable coins should go in terms of regulation. And as you pointed out in the bill that you co-drafted with Senator Lummis, and I agree with this, that stable coins are and should be prudentially regulated financial instruments. Notwithstanding a regulatory framework around stable coins, they're going to be commodities, in my view. I know, colleagues might have a different opinion, but we have done the legal analysis and examining the circumstances around the Tether case. It was clear to our enforcement team and the commission that Tether stablecoin was a commodity, and we needed to move forward and swiftly to police that market and that company.
Thank you. Thank you, Mr. Chairman.
Thank you. I'm going to go ahead. I've skipped out of the order, so I'm going to go ahead since I haven't voted, and then we'll get back if that's okay. Chairman Bennett, again, thank you for being here. Critics, in a derogatory way, have accused the CFTC of having a, quote, light touch, while ignoring the fact that the futures market has withstood the market shocks of the last few years better than any other markets. Why is the CFTC's principle-based regulatory framework the gold standard in terms of fostering market resiliency? And how has the agency shown an ability to protect market participants?
Thanks, Senator. Just briefly to sort of address your question, I use the word critics, and obviously with critics comes criticism, and that's natural. I accept that responsibility as chair of an agency. I signed up for it. But when I think about that word critic and criticism, I think about democracy. I think about sort of the friction of ideas, different ideas banging against each other. And I think we all have a mutual understanding that criticism is healthy. It's good because it leads to hopefully better outcomes. It's what we do at the commission, it's what this committee does, and it's what this body does. But to your point, a lot of what's been thrown at us, I wouldn't actually give it the credit of calling it criticism. It's nonsense, quite frankly. And I think our record demonstrates why under a principles-based approach that has very prescriptive rules built on top of those principles, we are a very effective, a very efficient, and a very impactful agency. And it is the farthest thing to suggest that the CFTC is a light touch regulator. Our enforcement record demonstrates that, and I think some numbers have been thrown around over the past hour about our record on assessing penalties, multiple size or times the size of our funding levels. And in terms of market structure and what we've been through over the past couple of years, historic volatility in commodity markets across agricultural, energy, metals, and financials, and the CFTC markets and CFTC clearing system has withstood that pressure admirably and, quite frankly, very successfully. And I think market participants across the globe recognize that. And lastly, I'll point on top of that, market structure. I think you and I had this discussion in the past. If you think about 2008 and the financial crisis, the one marketplace that was essentially salvageable was the clear derivatives market. And that was used as a framework for the swaps market regulatory regime that was put in place after 2010. The flash crash that we saw and some of the issues around price bands, we were implemented in different parts of the equity market as well. So I would just say, also thinking about the Treasury market reform is happening right now. They're looking at derivatives markets as a model. So we continue to be used as a model, and I think that is a clear signal that our markets are working well, are impactful, effective, and very resilient.
Good. No, I agree, and I think importantly the record shows that. That's really the key. Thank you for your insight on the regulatory work the agency is doing. As CFTC finalizes block trade reporting thresholds, will you talk about making sure they are well calibrated to avoid unintended consequences for liquidity and increased transaction costs?
Thank you, Senator. Absolutely make that commitment to make sure that we're constantly evaluating both the block thresholds and the reporting requirements. And just very quickly to share with you, it's a delicate balance, but one that we will tackle on head first to ensure that the incentives remain for participants to trade and to create liquidity for these markets, but also to make sure that we're ensuring equal access and transparency in markets. So we will constantly look at the data on a backward-looking basis to ensure that we're modifying and calibrating both the block threshold and the reporting requirements as appropriate.
Very quickly, swap markets are global, and I've been hearing about ongoing issues with U.S. customer access to these markets. Will you and your commissioners consider a rulemaking or other regulatory solution that provides U.S. customers with greater access to non-U.S. swap markets? And can you provide maybe a little bit of a path forward?
Thanks, Senator. Yeah, we certainly understand that U.S. customers need the ability to hedge on a global basis, and different jurisdictions across the globe provide different products that are more suitable depending on the business of a commercial end user or client. And we do consider it, and I will commit to you to make sure that I, myself will talk with my fellow commissioners to make sure that we're also and always considering applications for more access for U.S. customers. I would say, as one note of caution, and the way I think about these things is to ensure fair access and U.S. customer availability to global markets. It's important that bankruptcy protections are preserved. When you start allowing U.S. customers to trade on non-U.S. markets, there can always be a risk of bankruptcy protections and the bankruptcy regime of the non-U.S. market. I think we care deeply about making sure U.S. customers reserve that bankruptcy protection that is so important to the U.S. market. And then reciprocity. I think it's important as we consider access to non-U.S. markets that the jurisdictions that we're allowing to offer these services to U.S. markets also allow their citizens to access U.S. markets. So those are a few of the things we'll consider in the process.
Good, thank you. In closing, this isn't a question. I appreciate how your staff has been transparent with us regarding pausing the commitment of traders issue, but I've heard about it from Arkansas, so I'll have some questions for the record for that. Senator Braun.
Thank you, Mr. Chairman. Good morning, Mr. Benham. I believe Congress should be smart on the entire discussion of climate, including Republicans. To this end, I co-founded the Climate Caucus, and we also got through a bill, Growing Climate Solutions Act, with the help of Senator Boozman and many others. So I think that's an issue that if we're not involved with it, we'll regret, because many different sectors of even our supporters want us to be attentive to it. I am concerned, though, with the SEC's decision to maybe shoehorn climate into its materiality standard for financial risk disclosure. We have several federal agencies who are tasked with addressing the climate, and I don't think the SEC should be one of them. That's why I'm working with Ranking Member Boozman to introduce the Protect Farmers from the SEC Act. Farmers are not privately traded companies. As hard as their jobs are, the least we can do is keep the SEC from knocking the doors down on this. You've been involved with CFTC with studying the role derivatives may play in understanding, pricing, and addressing climate-related risk and transitioning to a low-carbon economy, all valid, I think, considerations. But Congress has not given the CFTC the authority to help transition to a lower carbon economy. Can you commit to wait for clear congressional authorization before adding climate change to the CFTC's portfolio?
Yes, sir.
Any additional answer other than yes?
Senator, look, of course, I live within the bounds of the Commodity Exchange Act. I know that. I respect that. And I think that is just the most important responsibility of the head of an agency. That said, yes, I've taken a number of steps to ensure that the agency is engaging with the private market, to ensure that we're, from a market perspective, facilitating the development of new innovative products that can help mitigate climate risk. And the derivatives market, in my view, becomes a central focal point in the transition to a low-carbon economy, because whether it's a large Indiana manufacturer, an agricultural producer, or a global financial institution, mitigating risk through credit, through foreign currency, through rates, really drives back to the CFTC's derivatives market. So ensuring that we're thinking about how climate change is impacting markets and how derivatives products are priced off of that risk or that climate alteration, or how they can be used as a tool, I think is important. So everything we do will be within the bounds of the Commodity Exchange Act, but I do think that we have to be forward-thinking and aggressive in supporting market-based initiatives to support the development of our markets.
Thank you. During your nomination hearing nearly 1.5 years ago, we discussed the issue of reauthorization. As we discussed then, authorization for the CFTC lapsed at the end of fiscal year 2013, a long time ago. Since then, for a decade, your agency has operated as an unauthorized appropriation. In addition to serving as an important step in the legislative process, congressional debates over reauthorizations also contribute to the oversight and reform processes. For example, last year you testified before this committee 3 times about additional statutory authorities you believe CFTC needs to regulate digital assets. There are also CFTC priorities, like we just discussed, that do not have backing in a statute. Climate risk, for instance. This is not CFTC's fault, of course. My colleagues and I have shirked off our responsibility, leaving agency rulemaking to fill the vacuum. While this is a dereliction of our duty as senators, it also leads to unchecked administrative growth. I don't really have a question here for you, but my ask colleagues is really to them to think critically about the risk of giving up Congress's sacred oversight and reauthorization authorities and do our job. Guessing you probably agree with that too.
I do, sir.
Thank you.
Thank you very much. Senator Grassley.
Thank you, Madam Chairman. Thank you, Commissioner, for being with us. I'm pleased that you noted in your testimony about the whistleblower program being successful. Whistleblowers are essential to helping the agency root out wrongdoing in the commodity trading industry and returning billions of dollars to the taxpayers. As one of the senators who led the original effort to establish the program in 2010, the program has accomplished much. However, in many ways, it has at times become a victim of its own success. Due to the defects in the way that the CFTC Whistleblower Fund is set up, there may not always be sufficient funds to pay whistleblower awards. Last Congress, I got passed into law a short-term fix to keep it going. The law ensures that the CFTC program continues to function even when expenses exceed the program's fund balance. There should be a more permanent fix. So my question to you is, if Congress isn't able to pass a longer-term solution to the whistleblower office, it will be reduced the effectiveness of the agency's enforcement efforts. Do you support a permanent extension of the CFTC Fund Management Act? And if not, why not?
Senator, thank you for the question. I wholeheartedly support a permanent fix, and I thank you for your leadership in taking steps towards fixing that. As you point out, the success of the program has been its biggest weakness, because we've been able to pay out huge sums of money because of whistleblowers and because of the effectiveness and the strength and the expertise of our enforcement program. And I have no reason to believe that that success will not continue in the future. But because of that continued success, we run the risk of that fund being depleted quicker than it can be restored. And what that really does then is put at risk both the whistleblower office and our Office of Customer Education and Outreach, which are two critical components of what the CFTC does to protect investors, to get information out to investors about the risks associated with our market. So a permanent fix would be extremely welcome, and I think would continue the long-standing success of both the whistleblower program, but the CFTC's enforcement program as well.
I think you may have answered part of my next question, but I think I'm going to ask it anyway, and there might be something you can fill in. In your testimony, you mentioned that the amendments to the statutory provision described the permitted uses of the Customer Protection Fund would allow for a new program so that Americans have the knowledge and tools to protect themselves from fraud. Can you elaborate more on the new programs you're envisioning if such amendments occur?
Thank you, Senator. It's a very important question, and I was very intentional in including it in my testimony because currently, and putting aside the limitations of the funding mechanism, our Office of Customer Education and Outreach is limited to using the funds for fraud or manipulation, which are extremely important because it gives us a tool to share information with the broader public about potential fraud or manipulation. However, what we've seen over the past decade or so is that there are a lot of new and additional tools that can be focused on education and advocacy, which are not clearly defined within fraud and manipulation, that I think would benefit from an expansion in that authority through statute. So with that expansion, and to the chairwoman's point about a growing retail participation in our market, expanding that remit from just fraud and manipulation to education and advocacy would allow us to use these funds to do more boots on the ground advocacy with local groups, I've said this in the past, with VFWs, ARRP, state regulators, to just make sure folks understand the risks associated with CFTC markets.
I think my last question I'm going to submit for the record because I got to get over and vote on this issue. Thank you, Mr. Commissioner.
Well, thank you very much, Senator Grassley. And Senator Hoeven.
Thank you, Madam Chair. Appreciate it. Chairman Benham, thanks for being here. Good to see you. Appreciate it. So our farmers are facing, just a whole myriad of challenges nowadays, including volatile markets and prices. And obviously, one of the things they do to try to manage that price risk in the market is to hedge their crop. It's incredibly important to them, and it's becoming more important. It's sophisticated, it's challenging, but certainly in my state, and I think many others, there's a significant amount of hedging they do every year with their crops, and a lot of times their financial institutions require them to do it. So what are you doing, what can you do to help make it easier for our farmers and ranchers to use that critically important tool?
Thanks, Senator. I'm going to give you a quick anecdote. I mentioned this earlier. I sponsor or run the Agricultural Advisory Committee. We had a meeting in December, and I asked the group, what should we talk about? And what should we examine? And a few things came up. One was shipping issues and issues around the Mississippi and water levels. Another issue that came up was access to brokers, essentially our FCMs, our future commission merchants. And I mentioned this earlier to Senator Klobuchar. We've seen a fair amount of concentration in the market, and this is, I think, a product of the 2008 reforms after the financial crisis. But what happens when you see concentration in any market, the smaller mid-sized firms tend to go away and they end up being larger firms. And I think that has the most impact on small and mid-sized agricultural companies and farmers and ranchers. So what we can do, I think, is constantly look at our rules and regulations to make sure that markets remain resilient and strong and cost-effective, which we do consistently, to make sure that farmers and ranchers consistently think of them as a risk management tool. But ultimately, my goal over the next few years is to have a larger conversation about what is the clearing and what is the risk management and derivatives ecosystem looking like, and does a farmer in North Dakota feel like they can use the futures market as another risk management tool on top of crop insurance, on top of commodity programs that are provided by the USDA. So we'll keep thinking about those things, engaging, traveling, visiting, and just listening to folks to make sure that we're doing what we should and doing what we can the best that we can.
Yeah, and you hit the nail on the head. That's really important. I mean, they use crop insurance, they use the countercyclical safety net, and they use your programs to really at least lock in enough to make sure that they can get from one year to the next, and then, you know, how profitable they may be for that year is dictate of a lot of other things, the crop conditions and weather and markets and so forth, prices. Obviously, one of the things we'll be working on the next Farm Bill is how farmers can benefit from carbon capture. The chairwoman, you know, and the ranking member have a legislation on this. It's clearly going to be under significant discussion as part of the next Farm Bill. It's my opinion that that should not be a large federally funded government program, but instead, USDA can play a role in setting parameters and so forth, and then you have the private markets, you know, that decide what they buy and how they want to interact in that area, and producers can respond to it, and hopefully there is a revenue opportunity for them there. What role can you play in making that happen?
Senator, everything you just described, in my view and from my seat as the chair of a market regulator, leads to a market developing, right? Because we can set the program, we can incentivize the activity, and then if a North Dakota farmer is able to sequester carbon, as I mentioned earlier to Senator Ernst, you're then generating an offset because of that sequestered carbon. And in many circumstances, that offset will be retired, but in many circumstances, that offset will be traded. And this is not unlike the RINs market, which is a byproduct of the Renewable Fuel Standard policy. And I just think it is critically important as this committee and body continues to think about the benefits of a carbon market, a market-driven carbon market. Do not forget that you're creating a marketplace with buyers and sellers. Mm-hmm. And as I experienced with the RFS RINs market, when you create a market, you're creating a place that's susceptible to fraud and manipulation. And we are a commodity market regulator. We stand ready to participate, to help, to lift the integrity of this market, and to create a venue where farmers can feel comfortable that what they're doing is generating a price that is adequate and appropriate for the work that they've done.
Madam Chair, beg your indulgence for one more. And that goes to the user fees. There's been a point of discussion. Previous budget request, there has been a request for CFTC to have to implement user fees. Now, we've increased funding, and as you know, I work on ag-approps and the ranking member there. We've increased the approps from about 63 million to about 250 million since 2002. So that's a substantial increase. And my concern with user fees, again, are, you know, farmers, ranchers being able to access, you know, the markets on a cost-effective basis. So I have concerns about that.
Senator, I appreciate that concern, and certainly we would not, and this goes to your first question about creating incentives or disincentives to participate in our market, right? We would not want to create an unnecessary cost on the end user community to participate in our markets. That said, I would say over that period of time that you just identified, about 20 years, derivatives markets have changed tremendously. We've not only started regulating the OTC swaps market, which is now regulated, but we've seen exponential growth in the futures and options market, and then we're having to police crypto markets and other areas. So we had a period in the 2010s where we were largely flat funded, and I say that with a little caution because we did go up a bit. But as chairman right now, I'm feeling that impact. You know, flat funding an organization, private or public, for a series of years, 3, 4, 5, has long-term impacts on morale, on attrition, and on recruitment. So we're trying to recover from that because Congress has been very gracious in increasing our funding over the past few years. And we hope that continues because there should be a recognition of the importance of the agency and the work that it does for Americans.
Yeah, and I do understand that, and we are going to be resource constrained. The chairwoman and I were just talking about the challenge of the Farm Bill. So I get that part of it, too, that you have to have the resources to do your job. That's very important.
Thank you.
Thank you very much. Thank you. And Senator Welch.
Thank you, Madam Chair, and I understand Mr. Benham is coming home here.
That's correct. That's correct.
Well, welcome. Welcome. I wanted to ask a little bit about the carbon offsets and whether they're working. There's an enormous boom in recent years with those carbon offsets being increased to about $1 billion in 2021, probably higher in 2022. And many of the world's largest corporations and also biggest carbon emitters are allocating significant resources, as you know, towards purchasing these offsets to meet net zero goals. But it's unclear to me, and I think a lot of folks, whether they're working on the goal of reducing carbon emissions as opposed to the cosmetic appearance that an effort is being made to do that, and give a talking point or bragging point for companies that probably want to do the right things, but does this work? So has the spike in the carbon offset market that's taken place over the past few years actually had a tangible impact on climate change mitigation, i.e. carbon reduction?
Senator, you know, it's an extremely important question and something that I think about, because ultimately when I think about the voluntary carbon markets and these markets that are developing, I was just speaking with Senator Hoeven, there's my role as a market regulator and observing the fact that markets are developing and that customers are participating in these markets where the underlying asset that's being traded is a commodity. And I think that directly implicates the CFTC, not only because it's a commodity asset, but as I pointed out earlier as well, on CFTC regulated exchanges, there are carbon offset futures contracts. So once you have futures contracts on CFTC markets, the market then becomes jurisdictional to us, both the derivatives market and the underlying cash market, the offsets themselves, because that fraud and manipulation is almost fungible between the cash market and the futures market. All that to be said, your question is important because it talks about the integrity of these markets and whether or not a carbon registry, which is, you know, arguing that we're sequestering, you know, X tons of carbon by planting 10,000 acres of trees. Are you really sequestering that carbon because of new plantings? Is there additionality, is a term often used? And I have to be very cautious and honest that we are a market regulator, we're not an environmental regulator. So we do.
That's helpful. I mean, because bottom line, these were created for the goal of carbon reduction. Mm-hmm. And if we've got a market that is its own internal organ, that can sustain itself, but it doesn't actually achieve the stated goal for which it was created. We need to know that, and what I'm hearing you say is it's not your job as CFTC, at the CFTC, to figure out whether the market is actually effective in achieving the goal.
Senator, yeah, absolutely. We are a market regulator. We do not have the personnel or the expertise to evaluate whether or not a project is actually sequestering X amount of carbon.
Madam Chair, that's really important to know because we've got this fiction out there that's unexamined, and I think all of us need to know whether this is just a market where people are moving money around and essentially speculating, as opposed to some market that is actually achieving a stated goal of carbon reduction. So how do we deal with that?
Senator, there are a number of private sector initiatives that are underway. The ICVCM is coming out with core carbon principles, and this is an industry-led effort to ensure a minimum set of standards and principles around the integrity of the carbon markets to ensure exactly what you're pointing out, that the advertised sequestration is actually occurring. I do think there's other roles for other agencies that have different areas of expertise.
So I don't know if this is a fair question, but would it be something where you could give us a recommendation of 2 or 3 things that we would have to do in order to satisfy folks that, in fact, the market is reducing carbon emissions or it isn't?
Absolutely, I'm happy to. And I would say I want to be very clear that I don't think the CFTC should be boots on the ground and examining a project to sequester carbon, but if a carbon registry is advertising the sequestration of some amount of carbon and then selling that offset to a consumer, that in itself is a sale, potentially, under some legal analysis, of a commodity asset. And then that's where the CFTC could come in, because you have that relationship between a potential fraudulent sale of a carbon offset and the impact it might have on our jurisdictional markets.
Well, thank you very much. My time is up, but I would like to follow up with you. I think it's an important question for all of us. So, Madam Chair, I yield back, and thank you for your consideration.
Well, thank you, Senator, and let me also just to add to this, particularly in agriculture, next week we will have, next Thursday, Secretary Vilsack with us, and I think this is an important area to discuss with him, because at the end of the year, we did pass the Growing Climate Solutions Act, which gives them the authority and responsibility to develop the technical expertise to be able to measure carbon reductions in agriculture with integrity, because you're exactly right. I mean, we have to know it's real reductions. There's integrity in the markets, and I think farmers want to know that as well. Right. And so in that piece, not energy markets and other things, but in the agriculture piece, we have now given the authority to USDA to really develop that expertise to measure what is a credible carbon reduction and integrity. So thank you so much for raising that, and we need to have further discussion. On that note, I want to thank Chairman Benham for joining us again today. We so much appreciate your leadership, the leadership of the Commission in so many ways, and I'm looking forward to working with you as we move forward on the issues of the Commodity Exchange Act and the agency's funding. We want to make sure that you're keeping pace with evolving markets on both fronts. It's a very important agency for our economy and for those in the agriculture space. And so thank you for joining us. We will keep the record open for 5 days, and the meeting is adjourned.